start with the session. First of all, thank you everyone who has joined in on a Friday morning. Today, we are going to discuss about a company called Orbis Financials and let you know how is this company doing in the real estate market, how are their financials, what are their future prospects, should we look focus it on it or not, and everything about this company. Let's get started. So So basically, first let's understand what is the business model of Orbis Financial and what does it do. So Orbis Financial is a provider of security services in India. Orbis entered the financial market as a custodian of securities. It provides investment services. The focus of the company is on the brokers, the portfolio managers, wealth manager, hedge funds, and the private equity funds. They offer their offerings are of custodian services, which includes clearinghouse settlements, risk management, and fund accounting. Uh, Institutional investors like FPIs, mutual funds, insurance companies, they who are willing to invest in the market usually prefer to do so by designing a custodian so that somebody is there to manage their money, their buying and selling, record the dividends, their tax, and charging fees of the services. Custodian has expertise in technology, managing heavy volumes of buy and sell, and also record the transactions of dividend and taxes. So Orbis is a dedicated custodian. So this is what is the moat of this company, that it has a dedicated custodian. There is no direct competitor of Orbis in the market, and it has a advantage, a first mover advantage in this domain, and it has an advantage over its competitor, which are foreign and Indian banks that are doing some sort of similar businesses. And the other mode that Orbis has is that it accepts deposits, but because it is not lending, it cannot have NPAs. So this is like a very big mode that Orbis has, that in terms of NPAs and in terms of liquidity, it does not have a crunch like banking sector is banking sector can have. Orbis is registered with SEBI as a custodian and a designated depository participant, as well as clearing member and depository participants in NSE, BSE, MSCI, and MCX. So this is what is all about Orbis basically. Now let's dig deep more about their revenue growth. How is the business doing? What are their profitability growth and everything? So basically, right now it has a face value of 10 and 11 crore odd shares in the market. It has a conservative PE of 33 right now at a price of 300 per share. They are in the subsector of asset management. If we talk about their PEB, price to book value, it is around 14. The market capitalization at this rate is something around 34,000 crores. If we talk about their sales growth, so on a year-on-year basis, they are having a sales growth of 70%. And if we talk about profitability growth, year on year, it is a very fancy number of 87%. And even in 4 years, the year on year CAGR is of around 87%. So let's look at the highlights and the financials of the company. So, like we just talked about, the revenue growth is at a 60% year-on-year growth level. And if we like discount it to a 5-year CAGR also, that is also a very healthy number of 71%. This is because of the mode that they have, that nobody has a dedicated custodian service to offer, which Orbis has. Profitability is also showing that number, where they have a year-on-year of 87% growth. Because of their unique business model, the market cap in FY23 was which was 2,000 crores has now increased to 3,400 crores. It is only because the investors are looking into this company and discounting the growth prospect that Orbis has. If we talk about how much cash collaterals and like assets that this company holds, they have a cash balance of 4,000 crores, and it includes 3,900 crores worth of clients' cash collaterals, which are using their depository services. Um, Also, the one big thing about Orbis is that there is a ace investor backing in Orbis Financial. So, as many of you might know, Ashish Kacholia sir, who is a ace investor, and he has a total portfolio of 23,000 crores. He has invested 51 crores in Orbis at a rate of 135. So this was something around 9 months back. So if we take this into account, obviously he must have not come for a smaller return. He will be looking into company's growth prospect and will ensure that the company is moving in a very robust manner. Uh, s- Talking about the investment thesis, if we see the PE that the market gives to RTA kind of businesses, it is something around 38x. And because Orbis is also functioning as a depository, the average conservative PE as per the industry standard is around 48x. So if we like assume on a conservative side that on a mixture of RTA and depository PE that is given, if it gets like around 30-35 PE, even then if we discount the growth that it can happen, so in a span of like 3 to 4 months, we are expecting that the Orbis would be fairly valued at 357, which is like a 20% up move from the current price point. And also, if we look into the intrinsic value that our analysts have come across, seeing the percentage of growth and the financials of the company, in like 3 to 5 years, you can expect intrinsic value to get discounted in the price of Orbis Financial. Right now, they are not expecting their IPO. There is no news in the market related to the IPO, but the company has done so well in the unlisted space. So even if we like consider that, even then the company is doing healthy, and we are expecting a healthier approach in the future as well. If we just a second. Yeah, if we like see Orbis Financial's gains in the last year, that have also been very robust. So in a yearly basis, it has like gained 220 rupees in the price of the company. So this time, 1 year back, it was at 80 rupees, and right now it is at 300 rupees, which is a change of 275%. Which and the volume is also very healthy considering a unlisted space stock. Um, let's look into the SWOT analysis of this company as to understand that what is the challenges that the company has, and what is just a second, yeah. So and all the opportunities and threats that can follow up Orbis. So first, let's talk about the strengths that the company has. The first is that the management team is very strong. So the let's just let me just tell you the management team also first. So Atul Gupta ji, he holds majority of stake, and he is the owner of the company, and he has a robust experience of 40 years in this market, and 40 plus years. He has experience in management consultancy, manufacturing sector, BFSI, and every sector that you can talk about. He's also a author of a book called Guide to Project Financing. So he's a ace in this sector. So that is why we have included in the strengths that it has a very strong management team. Coming to the next strength that Orbis has, asset under custody has shown a growth of 87% CAGR over 3 years, which demonstrate the good faith that this company has gained for of FIIs, FPIs, FDIs, mutual funds. All the business verticals are well integrated, such as custodian business is well complemented with the professional clearing member vertical and the RTA facility that they provide. The company has a very good client base that we have just talked about. The company also deals with institutional clients, which gives business after due diligence. So it is not that they are the because they are the only dedicated custodian only because of that they're getting business, but they are also passing the due diligences that the FPIs and the mutual fund does for managing their portfolio. So which is a very good sign. uh, let's talk about the opportunities first, and then let's come to the shortcomings that Orbis has. So the opportunities for Orbis first is from the government side. So the Niti Aayog released a report in July 22 on digital banking, stating that RBI may permit SEBI regulated non-banking custodians to have a reverse repo account that would hold both proprietary funds and client fund balances they hold under the power of attorney. And the second one would be that the Indian market is still less than 2% of the global custodian market. So, if we take a holistic picture of the globe, then India has a lot of percentage gain that they can take into account and manage more and more portfolios. Now let's come to the shortcomings that the Orbis Financial has. So the first shortcoming is that 26% of their income they're only generating 26% of the income from custodian service, which is linked to capital markets. So because markets can be sensitive and market can be sometimes really good and sometimes really bad. The amount of transactions that happen are directly connected to that, and because of that, the margins that Orbis gets will directly be impacted by the market sentiment of the capital markets. As they do not have a banking license, non-bank custodians cannot offer transactional services that complement custodian service, such as deposit accounts, foreign exchange management. So right now they have a limitation as to they cannot provide a transactional service, which can not work in their favor. So the company needs to work on this so that they can have a better growth prospect and have better offers for the customers. If there is any change in the policy, it can adversely impact Orbis. The major portion of their earnings, which is 68.8% of the total revenue, it is coming from interest income, which is their non-core business. So they would have to turn it around, and they would want that the main core business of custodian services, where they're having a revenue generation of 25%, it is something more than 50%, because that is what the core business of it is. But because the company is considerably new, we can ignore this, and we would want to see that in the coming years this percentage is reversed, or we see a slight increase in the percentages of their core businesses. Let's talk about the threats that Orbis Financial has. So, if there is any change in the norms of SEBI, that will like increase the competitive landscape for Orbis, and because right now it has a dominant position in some of the offerings that it has, it might lose it, or it might have to like share it with some other competitors. And Orbis is like competing with foreign banks, like the banks which have a lot of backing, a lot and lot of assets. So that is also a threat. So some of these services are a direct competition to Citibank, JP Morgan, Royal Bank of Scotland, which are very big names in the market. So these are the SWOT. This is the SWOT analysis of the company. Let's look into some charts and how the key trends are there in the market and everything. Like we just talked about, the contribution of country. This can be ignored. This is not that fruitful. Just a second. This is the competitive landscape that we were talking about. That if we talk about specialized custodian, then they're having a competition with ILFS and ADLBs. If we talk about their depository services and full-time banking services, they have a competition with big names like Axis and HDFC, and foreign banks like RBS and Citibank and everything. If we talk about what is the growth prospect, as to how can the company grow, if you see the number of mutual fund SIP contribution that is happening, it is increasing year on year. And like 2 days back also, I was reading an article on money control, which says that the mutual fund SIPs are at all time high, and it touched all time high in May. And because the market is right now very favorable for the investors to come in, which is why mutual fund SIPs are also at a peak high. If the SIPs would increase, the fund management by the mutual fund has also is also to be increased, and a depository or a custodian is required. So, which is like a very good point for Orbis Financial to book this growth and this robustness. The FDI inflows are also increasing. This is data till FY23, but FY24 data is even brighter than this. Um, if we talk about the insurance AUM, that is also on a high upside only. There is no business connected to Orbis which is seeing a dip. Every business that it is connected to is seeing a rise, which is like a good point for Orbis Financials. Now let's see the trends, that how is the global scenario and market scenario. Is it like favoring the Orbis business model, or it is in unfavorable to Orbis? So, increasing regulatory complexities, global financial crisis paved the way to increasing regulatory scrutinizing and tighter oversight to wealth management, which is good and bad. Good in the sense that it would be good for the investors and somebody who is related to the market as a receiver. From the point of view of Orbis, who has to actually provide this, they have a little lesser, more and a tighter regulatory scrutiny on them. But it on a if we see it on a larger perspective, it is good for both the company and the investors. Changing client needs. If there is an example that is given there here, so millennials are holding more of cash. So 40% of their assets are in cash and are distrustful of stock market, because there is less sensitization about the market as to how should we invest and everything. Because there is a global financial crisis that can happen, and which is why everybody would want to be very strict with their investment prospects. So this is one point. Empowered clients would be a second point. Digital capabilities are at their top. If we see the push of Zerodha and Angel One and stock brokerings like these, there are on their highs, and every new person who is opening accounts is opening account in these brokering firms, because everybody would want to invest. But if we talk about a ratio, then millennials would be at a lower end, and somebody who is of a age of 30 to 40 are investing more. So the number of derivative contracts are also like increasing. If you see that there is a huge sharp increase in the derivative contracts from FY22 to FY23, it is around a 80% move. And these derivative contracts also require fund accounting facilities, which Orbis provides. So these are also numbers which are directly impacting Orbis financials. We've already talked about the future prospects and the government initiatives. Let's just talk about their financials now, the exact numbers. So if you see from FY22, where their total revenue was something around 160 crores, it has almost doubled in FY23 at 257 crores, and we're expecting the FY24 number to be even robust. If we talk about the gross profit, that is also increased, and the net income is also doubled. So if we see a holistic view from the financials perspective, the company is doing really good. uh, let's talk about the ownership. So right now the ownership pattern is of 30% with the promoter, some institutional holdings which are 14%, some public institutional holdings of around 20%, and then there are others, this share is also trading in the unlisted space as we talk, which is around 35% in circulation. So this was it about Orbis Financials. We are good to open the deck for questions if somebody has any questions. The future projected growth. Okay, so let's just come back to this just a second. Yeah, so like we were just discussing, let me just get back to that slide that we can discuss about the future of the company. Yeah, so like you were talking about the future prospect, how is it for the company? As of 2022, the value of global custodian stands at USD 38.7 billion. That market is expected to grow at a level of 53.2 billion by FY26, which is almost like a say a 60 to 70% move. So that is the future prospect where Orbis can work upon getting some share out of it, market share. The market is still less than 2% of the global custody market. So, in comparison to the India share to GDP, which is 3.5, it implies that the assets that the country is managing, if we match it to the GDP also, even then we have a room of 1.5% to grow. So this is the future prospect as to where the company can get like a up move. I hope I answered your question, sir.
Yeah, Radhika.
Yeah, so you were asking the IPO expectation, right? So IPO, we don't have any news from the company in the public domain which tells us that the company is planning an IPO. But here, I would want to add that this company is doing really good in the unlisted space. So if we see from an investor perspective, investor wants return. So it is not that the company can grow or the value can be enriched only in the listed market. If you see the growth of the company in the unlisted space, that has been also robust. So even if the company does not come with their IPO in 2 years, it will make really good returns in the unlisted space as well.
Got it.
Okay, so the other question that we have is what is the downside risk involved? So this also we did talk about. Let me just go back to that slide so that we can understand that more. So the first downside risk that we feel is of Orbis is that they are very dependent on their custodian services, which is not like contributing more to their revenue completely. So they are getting 23 or 25% of the revenue from the core business that they have, and the depository service that they provide that accounts to 68% of their revenue. So this is the shortcoming that Orbis has. Other than that, if we talk about the custodian service only, if it is a core business, it has to work to get more market share in this, and 26% of the whole market share would not be a good sign if it is the same number in the coming years as well. Hope I answered your question, sir. Any more questions? Please feel free to ask.
Hello.
Yeah, sir.
Yeah. So could you explain exactly what's the process? How do they generate revenue? Because you said there's only 1/4 coming from custodian services and rest is coming from interest from bank deposits.
Yeah.
So could you explain that? Like, how exactly are they getting that interest?
Okay, let me just show you via a graph. First, let's talk about the client contribution to their AUM. So, like we talked about, what are the portfolios that they're managing? So, they're managing it for FPIs, mutual funds, insurance company, FDI, and others. So, if we take a pie representation of it, 28% of their revenue of their AUM is coming from FPIs. The AUM that they're managing for mutual fund is 21%. 17% for insurance companies, 9% for FDIs, and 25 are the institutional names. Now coming to what is the revenue segmentation. Let me just go through this and show it to you. Yeah. So revenue segmentation, the deposits that they take, the major portion, like we just talked about, their non-core business. They are getting interest on these bank deposits, which is accounting to 70% of it. From the trusteeship services that they're providing, they have 0.9% of the revenue. From the RTA service that they provide, they have. It is getting a little cropped, but it would be something around 3 to 5% from the RTA service, and from the custodian service, like we talked about, 25% of the revenue from the custodian service. Hope I answered your question, sir.
Yeah. Actually, what I'm trying to ask is how do they generate that income? I mean, what's the process? How do they, because if it's a product company, we can understand it easily that they are manufacturing it, then selling it. When they sell the product, they get the amount, right?
Uh,
But here,
yeah,
they're providing a service for that.
yeah,
For that service, they are getting the custodian fees. But how
yeah.
do they get that bank deposit interest? What's the
So
process exactly? How do they operate?
Basically, they are having these customers, the FIIs, DIIs, and mutual funds. So they are getting the revenue from managing their money. So if we talk about how they are managing their money, so these are the three four items which they cater to and they service, and because of this, which they are getting the revenue. So these are the 4 5 streams as to how they are earning the revenue because they are managing money. So the deposits that they have, they are getting interest on it. Then they what the trusteeship service that they're providing, they are getting revenue on that. The RTA service that they're providing, revenue is derived from that as well. And the clearing house and the custodian service that they are providing. These are the main segments as to how they are getting these revenue generated from the AUM that they're managing for FPIIs, DIIs, mutual funds, and institutional people.
She said there's no lending. They're not involved in any
No, no,
lending.
no. They are not involved in lending, which is why they cannot have NPAs, and that is what works in their favor.
And these deposits could be wiped off in an instant if the market goes down, because
Yeah, yeah,
these
that is
deposits
yeah,
are
yeah.
only so they so the interest income is highly volatile, and the custodian service could be is it? Could you explain the nature of these revenue? I mean, are they recurring or are they transactional?
Like you talked about that the depository service that they have, these interest on deposits, these can be wiped out. We have like covered it in the SWOT analysis, and we did talk about the shortcomings, where we talked about that the major part of the revenue is like connected to the market sentiment. So, which is why we it like remarked that the companies which is generating like 26% of the custodian service is directly connected to the capital market, which remains sensitive to the market performance. So this is a shortcoming where obviously the company would be doing good when the market sentiment is good, and the company's profitability can dip if the market sentiment is not favorable.
So what are the contracts exactly? I mean, is it annual fixed fees or based on performance or based on the amount the investors are investing through the custodian?
Some
What's
part
the
of it is
contract?
fixed, some part of it is fixed, and some part of it is transactional, based on the buying and selling that they're doing in the account that Orbis is managing.
Okay, and how difficult is it to establish another dedicated custodian? Because I've heard that Beacon Trusteeship Company is also into this. So, and it's a new one. So, isn't it unsustainable mode?
No, obviously they can have competition in the near future, but the competitors that they have right now, they have a integrated custodian facility and not a dedicated custodian facility, which is what makes Orbis different from the near competitors that it has. So, if in the future they are able to comply with the regulatories and get a license, then obviously Orbis can have competition. But right now, the dedicated custodian service that they're providing, nobody else in the market has the same sort of offering.
Could you explain the difference between integrated and dedicated? Because you also said that Orbis is into custodian, RTA, trusteeship. So, what does integrated and dedicated mean?
Mhm. I'll have to take that question separately. Would that be fine, sir?
Okay, so I
Yeah, yeah.
mean,
Let's talk about
separately.
let's talk about this after the call, please.
Okay,
Yeah, because that will require a little more time.
okay.
Yeah, yeah. Let's take the other questions that other investors have. So first question is from Pankaj ji, who's asking that what is the lock-in period? So, sir, because the share is in the unlisted space, there is basically no lock-in period in the unlisted market. But if the share gets listed and comes up with their IPO, for unlisted market, there is a ruling that for 6 months these shares are freezed. So in the unlisted space, there is no lock-in. And if the company comes up with their IPO, you will have to have a lock-in of 6 months on these shares that you buy in the unlisted space. Okay, so other question is that are the mutual fund managed domestic or foreign? Both. The mutual funds are of both sorts. Uh, the other question that we have is basically majority is coming from interest. Yeah, yeah, that is the downside right now that they have, that the major part of their income is coming from the non-core business, which is a interest on deposits. The other question that we have is what is the expected IPO offer price? Sir, we don't have a public domain information about the IPO right now, so that would be a little tough to answer because there is no news as of now of the IPO of Orbis. How to track its price on regular basis. Pankaj, you can like download our website, and there is a option on our website which will give you a market view as to what are the top gainers and the losers. Here, you can filter out whatever company you want to see. For example, if I would want to see a market move in Polymatic of the last year, I would just type Polymatic, and this is how Polymatic has moved. So it has had a change of 360 rupees. Right now, the price is of 770, and the change is of 87% in the yearly basis. You can do it on a monthly basis as well and a weekly basis as well. That is how you can track the performance of the company. Any more questions? Please share the name of the marquee investors who have already invested. Let me just show it to you, sir. So if we see the ownership pattern, there is a multi-act private equity investment trust who holds 8% of the stake in Orbis Financial. Plutus Wealth Management, which has a 6.6% of shares in Orbis. Then the 6% of holding has been allocated to Orbis Foundation. Then Arpit Khandelwal holds 20% of the company, and the promoter Atul Gupta, he has 23% of the stake in it. And if we talk about the ace investor who has already who has right now invested, that would be Ashish Kacholia sir, who has invested 51 crores in October. With him, there is a partner, Himalaya Finance and Investment Company, who has invested 51 crores at 135 rupees. You said that it is like a pre-IPO pitch and we didn't have IPO price offer. Yes, Monangni sir. So basically, in the unlisted space, every share that is soon to be going for an IPO is termed as a pre-IPO. So because these shares are available in the unlisted space, we term it as a pre-IPO. what will be the minimum investment. So the minimum investment for this company is 2,04,000, which will give you a lot of 680 shares in the company. Any other questions?
Radhika, hi. I have a pertinent question. This is
Yeah.
regarding the fixed income, fixed deposit income that the company receives. So, wanted to know the nature of deposits. Is it the owned funds of the company, or is it a borrowed, or is it part of how this portfolio is constructed? Basically, where the interest is received, and if it is an interest-bearing instrument, is the company, considering any other investments rather than a fixed deposit, or is it a short-term, funding that they may require? So that's why that has been contributing the interest income. Thank you.
Okay, so Tusharji, I'll have to take it separately because I'll have to consult the analyst for it. Because in the research report right now, I cannot see the segmentation of the deposits that they have. I assume that these are the deposits that they're getting from FPIs, FDIs, and the mutual fund agencies. But the nature of it, I'll have to confirm and get back to you. Any other questions? Yeah, sir. I'll give you a differentiation between the dedicated and integrated custodian, but that will take a quite longer time. So let me just confirm it to you after the call. Uh, the IPO, we don't have any information in the public domain as of now, so would be a little difficult to comment on the IPO. Are we good to close the call? Any more questions? Okay. Thank you for joining in, everybody.